Hi, in this video we're going to talk about using and understanding margins when trading with Plus 500. A margin is the amount of funds needed in your account to open and maintain a leveraged trade. First, we'll discuss the initial margin, which is used to open a leveraged trade. The initial margin is the amount of money needed to open a position, allowing you to pay a small percentage of the trade's value up front while remaining exposed to the position's full value. The maintenance margin is the minimum equity needed to keep a position open and is half the value of the initial margin. Let's assume you've deposited $1,000 to your account. If oil is trading with a leverage of 1 to 20, it means that initial margin is 5%. So, to open a position of 100 barrels of oil trading at $50 per barrel, you will need to allocate an initial margin of 5% or $250 of the $5,000 trade. For your oil trade, the maintenance margin is 2.5%. This is based on the position's value at time of opening, equaling $125. There may be prior margin commitments from other active positions, so it is important to continuously monitor your account equity. Let's say that in addition to your oil position of $5,000, you also have an open position on Facebook for $1,000. If Facebook's maintenance margin is 10% or $100, then your equity must remain above $225 to keep both positions open. Should your account equity approach your maintenance margin level, we will send a free notification via SMS, push or email with your equity and margin requirements. You can then decide if you'd like to add funds or close a position, fully or partially, to reduce your exposure. You can also allow the position to be automatically closed should your equity go below the maintenance margin. If the value of your trade changes suddenly and you can no longer satisfy the maintenance margin, the position will be closed automatically by margin call. Remember, unexpected market movements can lead to unexpected margin calls, and notifications are not guaranteed. Traders should regularly check their account equity to ensure that they have the amount required to maintain their open positions. Take advantage of custom price alerts and margin notifications to help you manage risk responsibly. Want to learn more? Check out our website